Hello and welcome to this edition of Closing Trades, and quite the contrast from where we were same time yesterday. That good news is finally getting sold into. A big overhang gets lifted with regards to both the US administration as well as China now at least coming to terms and trying to negotiate at least for the next 90 days, within which period of time they will try and work out a resolution with regards to tariffs. That said, also situation easing at the India-Pakistan border, and that also finally giving way to some good news. But that good news, much unlike yesterday, you had a big move of about almost 1,000 points in the Nifty. That's completely getting caved into. It's not just the case with the Nifty or the sensex, which is down about a good 1.5% and staring at the session lows right now. But even for the broader markets, while they're still holding out in the green, they've definitely come off from the peak of the day. So what's actually weighing heavy on the markets today? It's Infosys, there's Wipro, there's TCS, which is down about 3%. So IT clearly is your big drag. Other than that, of course, there are names like a Zomato, which are down 3.5%. Bharti, that's down 2.6% ahead of its numbers. Trent is weighing heavy. And of course, some of the other blue chips like an M&M, Kotak, HDFC Bank, ITC, L&T, they're all weighing heavy on the markets. Having said that, defense clearly continues to be the flavor. The EL has moved up another 4% in trade, and that's a solid mammoth move coming in. And some reprieve for those beaten down pharma names, as some more clarity comes by in terms of how generics are not really going to be impacted by all the talk around the tariffs on pharma. So DRL, Cipla, Sun Pharma, these are names which are actually holding out well in trade right now. But Cheryl, what about the global markets?
Look at the global markets actually, Aisha. The picture there is pretty bleak given the fact that you have some of the companies that have come out with announcements, especially auto companies, which have come out with the announcement of either halting their production or cutting down their production. You have Honda Motors also, which is actually now in pre-open rate in US pre-market is down about 4.5% or so, because they are seeing the FY26 profit actually lower by about 59% or so. If you look at what the European markets are doing at this point in time, let's take a look at what the European markets are doing. Before that, let me just mark the US futures because they're also lower. So the impact across the globe looks like similar the way how we are actually trading in today's markets. And yes, it's earnings heavy day. We have a couple of earnings that are lined up, and bottom of the screen you have MotoCorp that's come up with the numbers right now. And on the surface, if you look at the numbers, it looks like it is in line with estimates. But Kunal, let me come to you. Good afternoon. And what are you making of the markets at this point in time? Do you think it's just a pause? Because given the fact that we've had a lot of rally of late, and also we've hit the peak of good news.
Yeah, we've hit peak of good news, but I think after yesterday's 1,000-point move, you're not likely to go on to see a follow-through up move as it is. But I was actually expecting more of a muted day for the indices, maybe a 100 to 100 point range for the Nifty. But I think after today's move, what we've indicated that the VIX is not cooling off. And I think that's one of the major reasons why you've seen that 300 point dip getting extended for the index. I would still believe that largely we are trading with a positive bias. The earlier resistance of 24,400, 500 mark, we are now retesting this level back again. So maybe another 50 points, 100 points on the downside. If we happen to see maybe a mild bit of a downtick, say tomorrow, that could be taken as a good buying opportunity or a contrarian buying opportunity.
Okay, MotoCorp, and more on those numbers. At 1,080, I don't think we're too far away from what the ET Now poll was penciling in. 1,094 is what we were working with in terms of their bottom line figure. In terms of the revenue, we're anticipating a downtick of about 5%. 9,654 is the number that we're working with. Remember, in the quarter gone by, volume growth was subdued as the two-wheeler demand lagged expectations pretty much every month, and volumes did see a decline of about 1% on a year-on-year basis and a 6% of a downtick on a sequential basis when you were to average out the monthly sales data that we had from MotoCorp. We are expecting EBITDA margin to largely remain stable, though on a sequential basis. Remember, the promotional spends were expected to decline on a sequential basis. MotoCorp at 9,900 crore rupees on the revenue. So I think both the PAT as well as the revenue are looking largely in line right now. Having said that, look out for what the volume outlook is, what kind of product mix that you hear from the company, and of course their strategy on EV going forward. That's going to be extremely critical as well. But Kunal, MotoCorp, just just want to map the performance from the last 2 months, or rather from the April recovery in the markets. How's the stock performed?
So I think in the last 1 month, the stock is up 4-5%, but I think from the last 2-3 month lows, the stock is up some 10 to 11%. 3,500 thereabout was the low for Hero MotoCorp, and it's now come back to 4,000 plus levels. But at current levels, I would believe that the risk reward is definitely skewed on the upside for Hero MotoCorp. And I think the stock, which had fallen down almost 50% in the last 8-9 months prior to that, 6,000, 6,500 was the high for the stock, and 3,500 thereabout was the low for the stock. So when you compare this with the potential of the potential of the stock to rally from here on, I believe that the probability is very much on the higher side. So I think as a short to medium term play, current levels of Hero MotoCorp at 4,000 levels could be a very good buy levels.
Okay, could be a good buy level, but even if you look at the margins, they're largely flattish. Yes, there is a 65 rupee final dividend that the company has announced. The revenue at best is only a slight beat. These numbers are not as impressive for the stock to move up significantly higher from these levels. Yes, it's been an underperformer. Yes, it's recovered with the rest of the market in the month of April. But purely on the basis of these numbers, can the stock actually move up higher? Maybe not. What one has to see is what kind of management commentary do you hear, both in terms of volume outlook, the strategy on EV, like I mentioned earlier, as well as the product mix. That's something that we really need to see. But prima facie, these numbers are largely in line. We've got Devender Singhal as well joining in on the show right now to talk about his take on the market. Devender, hi. Good afternoon. Good to have you on the show. Tell me, how is it that you're mapping the entire construct of the two-wheeler industry?
Hi, good afternoon. See, it's been a mixed bag so far. We have seen EVs getting some traction. We have seen premium end of the motorcycles and scooters both getting some traction. But it's the lowest end of the market, the commuter segment, which has been under pressure. So I think hopefully with this good continued good monsoons, some flip from the government side in terms of being pushed and the rollouts, and next year's pay commission, this segment also should start kicking in.
Good afternoon to you, Devendra. This is Cheryl also joining in the conversation, and wanted to get your take now on the markets. How should one analyze? Because you have a slew of news that has actually played out over the last 2 to 3 weeks. You saw the sharp rally coming on the markets. You got the China-US trade truce. Everyone's watching and waiting and watching what will India do when you talk about trade deal with the United States. How should one actually now position themselves for the future?
See, first of all, there are two aspects to the trade deal. First is that we should ourselves get a pretty favorable one in terms of low tariff or low import duties being levied to us on our exports therein by the US. Second and most important is that we should not be in an unfavorable stance relative to our competitors. This would be like countries like Bangladesh, Vietnam, Sri Lanka, China. So both of that have to basically be in our favor for us to see a big kick up to our overall exports therein. So we have to wait and watch and see how India basically is able to whether we get a sweeter part of the deal or we are just with everybody else's now.
Yeah, absolutely. That's Hero MotoCorp. Let's just bring up that stock price up for you once again and show you how it's been reacting to the numbers and whether or not there is any material move on the stock price or not. There you go, 1.25% higher is where Hero MotoCorp is currently, 40.35 on the stock. But Devendra, the one segment which continues to outperform, it's oversold and continues to remain so, is IT. Do you think IT becomes a good contra play right now? Or would you still say there is still a lot of uncertainty out there with regards to how client spends in the US are going to pan out and what the shape of the US economy is going to be, so it's a best avoid right now?
See, I think that could have been the situation a couple of months back, specifically post the implementation of tariffs. Things were looking really hazy. Incrementally, as we are moving towards deals by deals happening with the US, first it was UK, now China. Hopefully, we should also sign a deal with the US administration sooner. I think it is basically resulting in a much more, visibility for the overall US corporates to do well. That being so, I think IT still offers a pretty decent scope to emerge even from here. I think the caveat here is that how intense would be the AI and its implications for the entire sector. I think otherwise we are getting things getting much clearer versus what it was 2 months back.
Absolutely. Devendra, stay with us. I'm going to quickly get in my researcher as well and try and stack up those Hero MotoCorp numbers. Shrishti, hi, afternoon. Largely an inline set, but tell me what's the commentary on future volume growth as well as their AV strategy, product mix, etc.?
Well, yes, inline set of numbers coming in from Hero MotoCorp, and especially the margin figure, because that was the key monitorable amidst the decline in the volume that we have seen for the company coming in. The company was actually able to sustain its margin at 14.2%, but the management commentary is definitely on the positive side. Hero MotoCorp generally come out with a positive management commentary, but this time they are highlighting that the EBITDA margin has been supported by a favorable product mix. This is enhanced by the cost efficiencies and the commodity cost control as well. The export volumes for Hero MotoCorp has outpaced the growth in the industry trend, though of course the key to note is that they are a little smaller player when it comes to the export market versus the rest, but the growth numbers are looking attractive. They are observing strong retail traction, especially in their new premium and the scooter offering. The continued consolidation in the core segment, the growth in the 125cc segment is what they are actually experiencing on ground, and the upcoming EV launch position them very well for a sustained growth momentum is what the company is highlighting. And lastly, looking ahead, they remain optimistic about the near to medium term growth outlook. So inline set of numbers, but yes, on many fronts, be it exports, be it some of the new launches, be it the segment wise contribution, the management commentary remains quite positive.
Right, so that's Hero MotoCorp for you, and what the commentary is coming in from the management, given the fact that the stock now is spiking in trade, 1.7% uptick coming in for Hero MotoCorp. Devendra, let me just come to you and get your view actually when you talk about the pharma space. In fact, before I do that, let me actually get Srishti once again on board to talk about Cipla numbers, because that one also came out with the numbers short while ago, and post that, Devendra, I'll get your view on the entire pharma space. But Srishti, tell us how are the numbers Cipla?
Almost in line set of numbers coming in from Cipla. Marginal disappointment what we have seen on the margin figure is what I would call it, because when it comes to the numbers, then the margin figure has come in at 22.5%, while the consensus street estimate was above 25%. And other than that, when we look at the profit figure, that has come in at 1214 crores, almost in line to what we were penciling in. If we look at some of the geographical contributions coming in for Cipla, then for North America market, the company has registered a sales number of $221 million. That's almost in line, a marginal disappointment on this front. And when it comes to the India business, a 10 to 13% growth is what we were penciling in, but the company actually registered an 8% growth on a YOY basis. The R&D spend stood at 6.3% for the quarter gone by. But looking ahead, Umang Vora, MD and CEO of Cipla Limited, does say that the focus will be on growing their key markets, further building their flagship brands, investing in the future pipeline, and focusing on resolutions on the regulatory front as well. So that's the management commentary on Cipla. Almost inline set of numbers is what I could call it for this particular company. Back to you.
Inline set for Cipla, inline set for Hero MotoCorp, although the management commentary from Hero MotoCorp is extremely bullish, and I guess that is what explains the stock spiking up. While the numbers were largely in line, the management is so confident about actually demand gaining traction and where they actually foresee Hero MotoCorp's performance in the next quarter and the fiscal as well. 2.25% higher for Hero MotoCorp as we speak right now, 40.70 in the stock. They did talk about EBITDA margin being supported by favorable demand dynamics right now, and export volumes actually managed to outpace the industry trends for them. That is what the management is indicating, observing strong retail traction, especially in new premium and scooter offerings for them. But Devendra, tell us about what you're saying, or rather your thoughts are on pharma right now. While Indian generics are largely protected, we don't know how the tariff tirade is actually going to pan out and whether or not eventually there will be some margin squeeze.
See, I won't dare say they're protected at this point in time because we are yet to see the contours of the deals gonna come. It does look like that the US is looking at lowering the drug prices. Now, how much of that impact would be taken by the end companies and how much from the ingredient suppliers or generic suppliers. I'm sure there would be some cut for sure. Now, the extent of which we don't know. It may be a minor cut, but I I won't be in the camp that would say that despite whatever being the burn being taken by the branded players, generics would be largely left untouched. I don't think that that's how it happens. Having said that, I think a lot of uncertainty around the sector is getting off. So we should basically be in a better state as we move forward. Now, within a month, we would get to know how much is the price erosion in the drugs of the branded players being there, and then how would the generics be in comparison to that. So, if the differential is not, we may do with some cuts. I think cost savings and something other measures can help us maintain the margins for the Indian players, but it's yet to be seen.
Right. Take coming in at Pharma right now. IT, of course, is the big drag as we see, but some of the other blue chips like ICICI Bank, L&T, Reliance, HDFC Bank, they are also not participating in today's move. Bharti is under pressure. It's down about 2.5%. There's M&M also, which is lower by about 2% as we speak. We will, of course, get in the earnings expectation of Bharti as well in just a bit. But Kunal, what do you foresee about today's move? Does it seem like we're going to undo all of yesterday's gain? And yesterday, does it seem like a flash in the pan now?
In terms of the market rally?
Yeah.
No, not really. I think we are still good to go on the upside. So after yesterday's 1,000-point move, I think what we are seeing is mild profit booking because we are looking at the market internals. Yesterday we saw many large cap names opening up on the upside, and then they see very mild bit of a follow through. Today, even though the markets are down 300 odd points on the Nifty, you're not seeing any major crack happening, in terms of sectors or large cap stocks. Yes, there has been some bit of profit booking across a broader based large cap names, but nothing major in terms of the trend reversal. For example, HDFC Bank, ICICI Bank, these stocks are down 0.5% to 1% broadly, which is a very normal or an average kind of a day for the index. And I think we are retesting that levels of 24,500 mark, which I believe is a very strong support levels. My sense is that we should be aiming for a decent bounce over the next couple of days for the indices. So as an index trader, I think this dip should be bottom too, especially 24,500, keeping that as a strong support or a pivot point for the index.
Since Bharti also is due to report its numbers and it's going in a little bit weak, although it's been a leadership stock regardless. But Ansh is here to tell us what we can expect from Bharti's quarterly performance. Ansh?
Bharti Airtel is set to report strong operational quarter. So revenue is likely to rise by around 7.7% sequentially to 48,602 crore. Whereas if we talk about Africa revenue, then that is expected to grow by around 2% sequentially in dollar terms to $1.3 billion. If we talk about EBITDA on consolidation basis, then we are seeing that it might go up by around 12% sequentially to 27,505 crore with margin expansion of more than 200 basis point to 56.6%. Now this India EBITDA may boost largely due to Indus Star consolidation. But on the bottom line, if we talk about net profit, then that may fall sharply by around 54% sequentially to 6,752 crore, as last quarter actually included one-time exceptional gain of around 7,546 crore. Talking about business front, if we talk about segment wise, then mobile service revenue may dip by around 1%, whereas enterprises business is likely to decline by 4 to 5%. ARPU may rise by from 245 rupees directly to 250 rupees, and this would be on the back of 2G to 4G migration. Also, data subscriber is expected to be at 28.4 crore, which is up by around 2.2% sequentially. Now, apart from these numbers, there are key things to watch out for. First is progress on 5G rollout. Second is capex trend, and third, most importantly, is cues on future tariff hikes.
All right, thank you so much for that, Ansh. We'll be watching out for Bharti Airtel when they come out with their numbers. Devendra, coming back to you, actually, I wanted to get your view on the entire telecom space, given the fact that you had a lot of focus and emphasis on the fact that you should look at domestic-oriented sectors. That's where you will actually, or maybe you will make money in this year, given the fact that you're seeing a volatile times globally. What's your take? Telecom makes the cut in that entire sort of a strategy?
Absolutely. This is one sector which is largely domestic focused, and you are seeing very little disruptions in terms of the earnings growth. whatever is coming up is actually helping the sector consolidate and move towards better profitability. We have seen the ARPU increases last year. I think in June we would have it been almost 12 months since the last price hike. There have been buzz around that this could be another one going forward over the next couple of quarters. All this adds to a pretty sharp increase in the overall profitability for the sector. I think institutions are also looking at this as a proxy consumption play. You are looking at, secular earnings growth plus upsides coming from better usage and better data usage and ARPU increases. So yeah, a good proxy to the overall consumption, specifically domestic consumption.
Okay, that's the take, of course, in Bharti. But Devinder, what we've seen is leadership has been very restricted in few hands in this entire turmoil which played out in the market and I'm just accounting for start of the year till what happened till March end, then the recovery which has played through, little bit of turmoil since April 2nd tariff announcement, and then the recovery again thereafter. It's largely been the HDFC Bank, ICICI Bank, M&M, Bharti when it comes to the Nifty. Do you now think that in the next leg of the market move, there could be newer leaders which could emerge? And if so, which ones do you think one could look at?
See, anecdotally, what you're saying should be the case. But I think it's very difficult to find out what the new leaders could be. I think the focus now should be that wherever you see growth happening, because India is a growth market. So whichever stocks or sectors you see growth happening, I think that they should be the ones one should be looking at keenly. Obviously, one should not overpay for the kind of growth. So yes, sectors which can give you growth in this environment would be the ones which would be favored by the market for sure.
No. Right. Let's put the spotlight then on the other sector that everyone's been talking about, and that is the metal space, Devendra. Given the fact that this one also is pretty much impacted with what happens globally, how should one actually watch this space? And especially when you talk about metals, you have a lot of ferrous, non-ferrous. You need to actually make the right pick in that space. Do you think it's time to look at metals in this sort of ever-changing, volatile environment?
See, honestly, I have a very poor understanding of metals. All through my investment career, I've been using one formula that whenever it is the costliest, you need to buy it. Whenever it is the cheapest, you need to sell it. So when the things are in losses and you want to see a turnaround happening, that is when you get into the metals. I think I have not been able to trade into them otherwise.
Makes sense. Okay, Devendra, good to have you on the show. We'll let you go on that note. Thanks for your time. Let me also welcome on board Vinay Rajani and find out what he's making of the market right now. Vinay, hi, afternoon. Any particular sector you're looking at right now? And does it seem like this, sell on the uptick of yesterday that we're seeing in the market play out is going to last some more days?
Yeah, so it is a typical result season move. So sector rotation is going on right now. The sector which was not performing yesterday, today it has performed. Like defense sector is the one of the sector which has got the momentum, and many stocks from that particular sector is looking strong right now. So defense is the space one can look at it. Some private sector, small private banking sector stocks are looking good, like CUB and RBL Bank and Karur Vysya Bank. So yes, overall market is still looking bullish. Sector rotation is going on. But if we were to take today's theme, it is a purely a defense theme, and it is looking very good. And if somebody is looking for trade in the short term, then I think defense space one can look at, and that looks very convincing for short term trading.
Right, so that's about the markets, but the AMFI semi-annual index rejig is around the corner, with Nuvama projecting that the announcement in early July and changes effective from August. Amongst the likely large cap entrants are Indian Hotels, Mankind Pharma and Apollo Hospitals. Meanwhile, RVNL, Hero MotoCorp and Swiggy may slip to mid-cap. Sharad is here with all the expectations. Sharad.
Well, the AMFI semi-annual rejig is coming, and as per the report by Nuvama Alternative, the announcement is likely to come in the first week of July. Now, effectiveness would be coming in from 1st August, and this potential changes, if we look at it for the large cap, mid cap, small cap, this will be coming in for the second half of calendar year 25. Now, this is important because there's no actual inflows or outflows coming in, but it helps in overall categorization for active fund managers. Now let's look at the stocks which should be in focus, the potential large cap entrants which will be actually moving in from the definition of mid cap to large cap. Some of the names include Shree Cement, Mazgaon Dock, Mankind Pharma, Solar Industries, Apollo Hospitals, Lupin, and even Dixon Tech, to name a few which is coming on your screen. Also, there are some stocks which will be coming down from the category of large cap to mid cap as per the definitions by AMFI. These names includes RVNL, Hero MotoCorp, Indian Overseas Bank, Cummins India, ICICI Pru Life, and even making it to the list is Dabur and Polycab and JSW Energy, to name. Also, some stocks which are the potential mid-cap entrants, basically from small cap to mid-cap definition. They include Broadway Phillips India, KPR Mills, Narayan Hrudhale. From pharma space, we're also having Laurus Labs. Also making it to the list, borderline is MCX, Radico Khaitan, Cholamandalam, and Global Health as well. Some stocks which are moving in from the definition of mid-cap to small cap. These names include Punjab and Sind Bank, Ola Electric Mobility, Apar Industries, New India Assurance, and also IGL, Syngene, Deepak Nitrite, and even Tata Tech expected to come in the definition of small cap. So this is the entire report coming in. Expectations, this is for the first initial ones from the AMFI's semi-annual rejig.
Right, Sharad, we'll leave it at that. That's the interesting rejig which is expected. But in the meantime, let's also get in some closing trading strategies. Half an hour to go before we wind up for the day. Kunal, what's on your list?
So I'll go with an offbeat sector that's on the PSU banking name, and SBI is something which I believe at current levels of 780 and 90 thereabouts, I think starts to look attractive because the stock is nearing a break of its 200 moving average. So bullish on SBI.
Okay, bullish on SBI. That's the call from Kunal. Vinay, what about you?
Yes, I would take one private sector bank, City Union Bank, CUB is the code. So as I said that I am bullish on the small private sector banks. One of the stock is CUB, which I like. It has given a fresh breakout from the consolidation and the primary trend has been bullish. So it is one of the outperforming small private sector banks and looks like a fresh breakout on the short-term charts. So I would go long around here 190. Stop loss can be kept at 186. This is purely for trading. And on the upside, we can expect a target of 197 on in next 2 to 3 trading session. The second pick I would choose from the defense space and railway stock. We can also say it as a railway stock. The stock name is BEML, Bharat Earth Mover, which is looking strong. It has given a fresh breakout and surpassed the 200 days average. Which is looking very strong. 33.20 is the rate around which one can go long. 3250 is the stop loss for the short term trading. On the upside, I'm expecting a target of 3500 in next 2 to 3 trading sessions.
Right. So that's the closing trades coming in from both of our experts. But on that note, we'll slip into a break on this edition of Closing Trades. Don't go anywhere, more on the other side. Welcome back. You're watching Closing Trades right here on ET Now. We also have Sudeep Bandhavadar who's joining us on the show right now. Very good afternoon to you, Sudeep. Thank you so much for joining us on ET Now. Let's talk about the markets because a lot has transpired over the last 1 week or so. You've seen the entire market construct change. How should one actually position themselves right now?
I think yesterday what we saw was a one-time issue. Obviously it was looking little over enthusiastic, the market yesterday. So a little bit of correction today was expected, and we are seeing pretty much that getting played out. However, a lot of positives are there in the market, and we can't discount that. The entire trade war scenario which was developing around us with the US president going on about it, I think things are cooling down a bit with their kind of truce with China for 90 days with very reasonable tariffs on both the sides. August definitely well for US economy and the global economy as well. Of course, the peace which prevails between India and Pakistan now, as far as geopolitical situation is concerned, is most welcome. So under the circumstances, I think FII buying in Indian markets will come back, and that is what we are seeing. It may not happen at one shot, it will happen gradually. And we have to remember that in spite of the correction which we had seen earlier and what we did see today, I don't think Indian market is cheap. So we have FIIs coming. We will have FIIs coming, but they will be careful and they will be selectively entering Indian stocks. I tend to believe that large caps will generally have a increased share in FII portfolio compared to even what they had earlier. They always had a bias towards the large cap, but the bias will be more pronounced now, considering the fact that large cap is still available at relatively better valuation compared to the attractive mid cap and small cap shares.
Interesting. So, Sudeep, afternoon firstly. Tell me, where is it that you think there is a little discomfort when it comes to valuations, wherein you think they're a little high?
Well, I think, defense is one area where I think, again, we are seeing a valuation reaching a level which is, becomes unsustainable beyond a point. Of course, defense is the flavor of the season and there is huge opportunity for Indian defense companies, but the valuation still looks very, very rich. The potential is undeniable, but the fact that you are discounting the potential of a, maybe 5, 10, 20 years into a valuation today, which doesn't augur well from an investor's point of view. So I'll be a little cautious. I'm not saying all defense companies. Defense electronics does look good even at current level. Shipyards from a long-term perspective does look good, but one has to be a little careful. And if you're buying defense stock, be in it for the long haul. Don't expect super normal returns in the short term. The other segment where I think I'll be a little careful is IT. I think we did see a rally yesterday and bit of a correction today, but one has to be still careful on IT because the problems in US is not yet over. We'll have to wait and watch, and unless US gets back on real fast growth track, IT companies' performance will always be a bit subdued.
And I would love to talk a little bit more about this defense stocks. But Sudeep, stay with us. Got to cut across to Umang Vora, MD and Global CEO at Cipla, talking about their quarterly performance.
We don't see the impact. In any case, we are a generic sector. The purpose of what we do is to provide medicines to people who really need it from an affordability perspective. So as of now, we don't see any impact of tariffs on our business. And of course, there's a lot that's going to happen, between the US government and the Indian government, and of course, members of the IPA. We're monitoring all of that, and we don't expect material changes to the business environment for generics.
Her second question is, what kind of impact is Cipla seeing from Trump's decision on the prescription drug price cuts?
Yeah, I think, it was announced yesterday. So there isn't been enough time for us to fully assess what is the implication of that. As of now, what we understand is that this is largely targeted towards branded drugs. As of now, what we understand is that this is a voluntary measure that that perhaps companies will be taking. There are aspects of MFN clauses, etc., from what we've read in the public domain. We do not know how that will be implemented and in which manner. So as of now, from a generic perspective, I think generic prices in the US are already very significantly comparable with the rest of the world. In some cases, lower. So we don't believe that, at least for now, based on what the promulgation says, we think this is more a branded sector impact as against anything on the generic side.
Her third question is, what are the future drivers of growth in North America?
There are many. I think we have our own pipeline that will unlock as our facilities and our products get ready and closer to launch. We already have a couple of imminent launches that should come in. We're also looking forward to the unlocking of our pipeline that we've communicated earlier, which was the peptides. So yeah, I think we see a lot of portfolio momentum adding to the Cipla trajectory there. Possibly enough to start to substitute, the reduction in lenalidomide.
Thank you, Mang. That's all from Rishika. Our next question is by Vishwanath Pilla from Money Control. Vishwanath, if you could go ahead and ask your question. Vishwanath, can you hear us?
There might be a problem with the audio because both the,
Hi, sir. Can you hear me?
yeah, hi, Vishnu. Thank
Hi,
you for
sir.
saving the day.
Yeah. So first of all, congratulations, sir. I mean, all the indicators I've seen, FY25 is the best year, if I'm not wrong.
Yes, that is right, Vishnu. This is fairly significantly a new, a new level for us, both in terms of top line and bottom line, as well as profitability. Yes, thank you.
Sir, any outlook for FY26, sir, on, I mean, if possible, on revenue or EBITDA? What is your expectation?
No, we are looking at growth, Vishnu. Despite what we're going to see with lenalidomide, the company is still aiming to grow over where it is today, and because there are multiple moving parts, right, between just the earlier questions on tariff, on drug pricing, on the geopolitical situation in between India and Pakistan, and multiple things. The dollar situation. I just think it's there are multiple options and multiple multiple avenues where performance could go. But we want to continue to grow despite despite lenalidomide evening out.
So there are enough.
Okay, that's Umang Vora talking about as to how there shouldn't be any material change to business environment for generics, at least when it comes to the tariff tirade, which is currently on. Cipla, largely an inline set of numbers, did see a little bit of volatility post the numbers and now stabilizing about the 0.5% gain mark. But Kunal, I want to check in with you on some of these defense names, and that's the red flag that Sudeep did talk about. While they look good for a long-term hold, but that's where a little bit of valuation discomfort is. What are you seeing on the charts for a HAL and BEL in specific?
I think both these charts, specifically for example for BEL, the stock is coming very close towards its lifetime high levels. I'm not sure whether the stock has already broken it, but I think 334.5 thereabouts was the time when the stock had come back to that kind of a level in 2024. And post that, the stock went to almost like a 30% correction. I think 250, 260 was the low for BEL. So the stock has done its entire process of going through a correction which lasted for more than 12 months. And then gradually we've seen the stock picking up pace and then acting as more like a leader for the entire defense pack. That I believe is a very strong quality sign that we are looking at a breakout yet again for many of these stocks after almost 1.5 odd years of these stocks going to correction and then a rally. Same is the case with HAL. The stock has been a slight bit of an underperformer when we look at this on a relative basis. But I think at current levels of 4,500, 600, I would believe even HAL looks extremely attractive. My sense is that many of these stocks are showing signs of a synchronized breakout. There is a volume uptick, and these stocks, they move into stages of a rally and then a pause for themselves. So it's not as if that these stocks are going through a vertical upside. These stocks are giving those intermittent corrections as well as pauses in a trend. That I believe is a strong indicator that this trend is here to last.
Right, so that's the take coming in on some of these defense space. Sudeep, I wanted your view on specialty chemical space, because the fact that you saw this entire Trump tariff announcements and you had the shift back again to the China plus one strategy, which Indian specialty chemical players would have likely benefited. Now that you have some sort of a trade truce that is in place when you talk about US and China, what does this mean for this entire space?
I don't think anything changes as far as this space is concerned, particularly on China plus one. I think China plus one started much before this, tariff war began in early April. The need for diversification out of China and having an alternate manufacturing and supply base was felt because of geopolitical concerns much before the tariff war had started. So I think that rationale continues to remain, and most global manufacturers are looking forward to having a China plus one situation, definitely. Now, probably this tariff war, had it continued, would have led to completely dropping of China. That was not really feasible at least in the short to medium medium term, and probably that's not ever going to happen the way things are moving. But China plus one logic for Indian specialty chemical manufacturers does remain, and the opportunity is definitely there. Now, a lot of things happened over the last couple of years whereby this sector was really bombed out. The performance was bad because of multiple reasons. There were glut in the market. China was dumping products in the market, and there was very clearly lack of demand for their products. But things are changing. The supply overhang is over, and demand is increasing. And as far as the performance is concerned of specialty chemicals, agrochemicals, if you watch carefully the Q4 numbers, I think things are definitely showing signs of improvement. From an investment point of view, I think if somebody is an aggressive investor, it is probably worthwhile looking at buying some of the leading stocks in these sectors. I can talk about UPL. I think it's a good buy from a 1 year kind of a hold perspective. You can look at SRF. It's a good buy. So on and so forth.
Okay, that's the take coming in on what's looking good or not within the specialty chemical space. But I just want to check in on where the market is settling in for the day. And after that big move yesterday, today, of course, we're headed in almost for an over 400-point fall for the Nifty futures. 24,620 thereabouts is where we're closing in for the day. Of course, technology has been quite a big drag, but similar is the case been with some of the key names like in Eternal. Some of the banking names have seen some profit taking. Hindalco didn't see a rub off from Novelis's performance, down 3%. Trent was lower. Bharti fell about 3%. Innocent Bank was also lower, and that's been the case with the rest of the blue chips like in L&T, Reliance as well, which is now off by more than 1.5% on the futures. Sudeep, to your mind, where do you see leadership actually changing hands if the up move were to stay by in the markets?
I think very clearly leadership has come back and is coming back to BFSI. I think pretty much BFSI will lead the rally. And there are multiple reasons for that. I think overall BFSI was never overvalued like many other sectors where the valuation comfort even now is there in BFSI. The leading BFSI companies, particularly the private sector banks, are doing exceedingly well on all parameters. Pockets of BFSI like gold finance are stabilizing, and opportunity for further improvement is there. Insurance is one pocket where a lot of reforms have come in and are coming in. So from a medium to long-term perspective, that does look exceedingly well. So overall BFSI sector, of course, you have to leave out these unsecured lenders, microfinance companies, etc. for the time being, considering the asset quality challenges which they are facing. But by and large, BFSI looks good. Apart from BFSI, the other segment where I think I have been positive is I just mentioned about chemicals and specialty chemicals. Things should start looking up in that space. The other sector where I have been having positive view is metals. I think it's volatile and it will continue to remain volatile because there are a lot of pulls and pushes as well as the global factors which does affect metals. But metals by and large, I think with the kind of demand which domestic market is depicting and the kind of demand which expectedly other global markets, including China, will have, I think metals should be in for a good time in this current fiscal.
Take on the preferred spaces in this market, but amid the ongoing tension, the airlines are taking a precautionary approach, and despite the reopening of 32 airports, they've majorly cancelled flight operations today. Samir Dikshit, my colleague, is here with more details on what's really happening with the flights and the airports which were still under closure. Samir?
So yes, the government allowed the reopening of the 32 airports which were closed as a precautionary, as a safety and security measures by the government. But then, post the announcement of ceasefire, these 32 airports were open for the civil flight operations. But we have seen that on 12th of May, we saw that a couple of drones were spotted in a particular city, and after which the flights or the airlines they are now taking sort of a precautionary approach in terms of resumption of the flight. And that is the reason that Air India has announced that they are cancelling the flights to and from Leh, Srinagar, Udhampur, Rajkot on 13th of May. Similarly, Indigo has also announced to cancel the flight operations from these particular airports, whether it be Srinagar, Rajkot, and several other northern airports as well on 13th of May. Going forward, they will definitely resume the flight. But in addition to this, SpiceJet has taken a sort of an approach where they will be resuming the flight on 13th. The only flight that they will operate to Srinagar will take off by around like 2:30 p.m. on 13th of May. But going forward, we expect that maybe in next 7 to 10 days, it will take when all the airlines, whether it be SpiceJet, Indigo, Air India Express, they will actually rotating back to the regular schedule of the flight operations.
Right, Sameer. In fact, talking about aviation, remember that aviation was one of the sectors that was hit pretty hard given the fact that you had Pakistan closing the airspace. What are sources telling you now, given the fact that you have aviation minister who's already chaired meeting with airline representatives?
Yes, definitely. This is a very important meeting that was chaired by the aviation minister with the airline representative. And this meeting was focused to understand that what sort of impact the aviation sector has gone through, specifically the airlines, what sort of impact they have faced. Especially earlier, we have seen the Pakistan airspace closure, which is still in place. And because of Operation Sindhu, the airlines were not allowed to operate at multiple airports. And if you count these two factors, definitely the airlines, they have faced a lot of revenue loss, a lot of financial challenges. And seeking that sort of impact, aviation minister met with the airline representative. The primary message that was conveyed from the government side is that we completely understand the kind of problem that the airlines are facing. But this is the moment that first the priority should be given to the convenience of the passengers, especially those who are having a confirmed ticket bookings if they are supposed to fly from the airports which were earlier impacted. For example, Srinagar, Dharamshila, Shimla, Rajkot. So these all airports, if they are supposed to fly, then they will be given preference. No cancellation or rescheduling charges will be levied. So that sort of convenience will be provided. And going forward, the ministry or the government is trying to analyze that how the support can be given in. From the airline side, it was a point that was raised to the government that Pakistan airspace closure, it seems that it will go for a bit longer period of time. And if this happens, then government should actively consider to provide some sort of relief to the airlines, whether it be in terms of financial support or the tax benefit. So that was a kind of a request that was given to the government, and government will try to find out the way forward.
Thank you so much for that, Sameer, for getting us all those crucial updates when you talk about the aviation industry and what your sources are telling you with regards to the aviation minister's meeting with airline representatives. Sudeep, coming to you actually, and let's put the spotlight on the aviation and the hospitality space. Given the fact the way how things have transpired, this sector was among the worst hit. What's your take now? How should one analyze if you have to go ahead and invest in it for the longer term, that is?
Definitely from a long-term perspective, hospitality industry does look exceedingly good. And, the correction which happened on the back of this conflict was a great opportunity to accumulate some of the good quality hotel stocks. Indian hotels came up with a decent set of numbers. And post that, there was significant correction on account of this Operation Sindoor. I think at current level, definitely it's worth buying. Look at Chalet Hotels. Again, I think current level, it's a good buy. Lemon Tree, I think pretty much all the hotels, if you're talking about long term, I think all these are good buy. Travel and tourism volume increase is here to stay. And I think we will see continuous upside in this industry, which will benefit the hotel industry. As far as aviation is concerned, while the pretty much the same set of factors do remain, but valuation is a little rich, and we are going through a situation where aviation turbine fuel prices are at lower level. Any change in aviation turbine fuel prices and movement towards upward movement of ATF prices does affect profitability in a significant manner. So I'll be cautious on the aviation stocks, particularly particularly, the one stock which is worth talking about is Interglobe Aviation. Valuation looks rich. Performance-wise, there is nothing to complain, but I won't venture to buy at current valuation.
Okay. Don't venture to buy out Interglobe at the current valuation for sure, even though the stock is a good long-term story. But Sandeep, good to have you on the show. Thanks as always for joining in. Just counting down to the market close, so let's get in some BTST trades as well going on that note. Kunal, what's in your list?
So I'll go with two buy calls. The first one is NBCC. That's a chart which is starting to look attractive in terms of a breakout above 100. So would suggest a buy with a near-term target closer to 106. Stop loss could be kept at 97. And Policy Bazaar is something which I'd recommended in the morning. Continue to be bullish on the stock. Targets for Policy Bazaar remains at 1760. Stop loss could be trailed higher to 1690.
All right, so those are the BTST ideas coming in from Kunal. But let's head over to Shrishti to take us through what we're actually penciling in for Tata Motors, who's all set to report his number anytime now. Shrishti, over to you. And what are we expecting for Tata Motors?
So when it comes to Tata Motors number, let me first give you the volume picture. This time when it comes to their India business, both PV and CV have witnessed a decline in their volumes on a YY basis. A 6% decline in the PV volumes, a 3% decline in the CV volumes is what we have seen, while the JLR volumes are expected to grow by 3% on a YY basis. And especially now when it comes to the margins, the CV EBITDA margins is expected to expand. PV EBITDA margin expected to remain just stable around that 7.3% mark. But well, of course, as we know, the key to watch will be the JLR EBIT margin, and this time an expectation of 10.7% is what we are penciling in. Now let's take you through numbers as well. When it comes to revenue front, then 1,23,158 crores is our expectation. EBITDA expected at 16,331 crores, and the consolidated margin expectation is at 13.3%. Yes, on a YY basis, there will be a decline if the numbers come at 13.3%, but sequentially a slight jump up is what we are expecting. And lastly, on the profit figure, one should not compare it on a YY basis because the base had a deferred tax impact as well, and this time talking about the numbers, 7,669 crores is what we are penciling in. So that's the expectation from Tata Motors on the number front, but the key to watch will indeed be the management commentary amidst all the tariff announcement that has been going on. Yes, of course, the US-UK tariff deal is through, but what was the impact in the quarter gone by, and what kind of an impact is likely with that 10% tariff still through? That will be something that we will be watching out for, and along with that, the management commentary on the domestic demand will be the other key trigger that we will be watching.
Right, okay, Shrishti, we'll leave it at that. Kunal, we'll let you go on that note as well. And going to wind up on this edition of Closing Trades, but I'll hand it over to Snehi for the closing trades.
Absolutely. Let's take a roundup of what today's trading session has been like. It's been an absolute mayhem, if you could call it that, but nothing to worry about compared to the kind of gains we've seen yesterday. Yes, we've come halfway lower from there. Remember, yesterday we had a good 900-point uptick coming in. We're lower by 350 points today, and we were at one point doing pretty okay after an initial blip in the first half of the trade. We had managed to recover, but all of those gains have now fizzled out. And how? Because we are even below the 24,600 mark when it comes to the Nifty, almost a 1.5% cut coming in. Sensex 2 in tandem, a 1.6% cut coming in on that front as well, and barely above the 81,000 mark is where the Sensex is right now. Nifty Bank also languishing in trade, but at a lesser extent than the benchmarks right now. You have an 0.8% cut coming in on Nifty Bank as we speak. Let's pull up the broader markets and see if there was any show of resilience or any show of strength from that space. And yes, there was, because Nifty mid-cap, although only 0.2% higher, is in the green nonetheless. So good move from the mid-cap space. It's the small-cap space that has done very well in today's trading session, because while you have the benchmarks that are lagging with 1.5% of a cut, the small-cap index is trading with gains of 0.8%. Very good moves coming in from some of the small cap names in today's trade. If you take stock of the advanced decline ratio and how that has panned out today, the favor has largely been towards the side of the advances, so that's where the scales were tipping. So good move on that front. India Wix, another 1% cool off coming in today, back below those 19 levels and 18.2 thereabout. Looking pretty okay for the India Wix right now as well. Let's talk about some nifty gainers in today's trade. You had BEL, Geo Financial, Hero Moto has done pretty well on the back of its numbers coming in, largely inline set. Dr. Reddy's was up, Sun Pharma, Cipla, Adani Ent and Adani Ports. Cipla, on the other side, you had a miss coming in on margins and EBITDA, but revenue and PAT were largely in line. So Cipla also has done pretty okay for itself, a 0.7% uptick coming in on that front. What has not done well today is the entire IT pack. Nifty IT was your biggest loser in trade today. Names like Infosys, HCL Tech, TCS have taken a beating. Other than that, you have Eternal that was low, Power Grid, Bharti Airtel, IndusInd Bank. All of these stocks have been weighing on the Nifty today. Let's take a look at the sectoral moves coming in. Nifty Media, your biggest gainer in today's trade, followed by PSU Banks and Pharma. The only three indices that were in the green today, because on the flip side, you have biggest loser, like I mentioned, Nifty IT. Followed by that was Nifty FMCG, Nifty Auto, Metal, Nifty Bank and Nifty Realty. And the least gains, least cut coming in on Nifty Energy, that's only 0.5% cut, and biggest cut coming in on Nifty IT today. Remember, Nifty IT was the top sectoral gainer yesterday. Around a 6.5-7% gain came in on Nifty IT yesterday. We've seen some selling, we've seen some cooling off happening on that index. A 2.5% almost cut coming in on Nifty IT, with names like Tech Mahindra, LTI Mindtree, Infosys, HCL Tech, TCS, Wipro, Emphasis, Persistent Systems. All of them have taken the beating in today's trade, and all of those names have ended in the red. Some other earnings candidates to talk about. AB Capital, you have the numbers that came out very recently. Let's take a look at how that stock has done. But well, yes, not much happening on that front as well. A 1.5% cut on AB Capital. But that's how we wind up for today's trading session. Cuts coming in across the market. A 1.5% cut almost is what we've seen on the Nifty.